Welcome to Coach Ogie. In this video, I want to show you how I made 64% in 98 days from this particular insurance stock. I always tell you to hit notification bell and also make sure you are subscribed to my channel so that when I post videos like this and why you need to quickly jump on the stock, you would also be among the first set of people who are able to get the stocks in the markets. Now, this particular stock that I'm talking to you right now might look like, oh, it has rallied so high. It's already at the top, or it has moved by 64%. So there is no need for me to buy the stock again. No, stock trading is not like that. There are certain stocks that even when they move, even when they go higher, they even get cheaper every now and then. Why? Because of the growth rate. Now, the interesting thing about this particular stock is that right now, it is actually 37% undervalued based on my own modest growth. So I had to use a 5-year projection of 40%, even though the actual projection, the actual growth rate in the last 5 years is very high, like at 96%. But then I want to be very modest. I don't want to be too optimistic. So I had to half that particular number by two, and that gave me 40%. So that means that averagely we should be expecting like 40% growth minimum between 2023 and 2024. So if this stock is able to deliver 40%, then it means that the price right now is 37% on the value. That means there's still possibility that this guy will move up. So that is the stock I want to share right here. This is about stocks I share in my community. This is about stocks I recommend if you join my private community. But then I want to just give you an insight as to how I analyze stock and things I do. And this is just one of the many stocks that I am well positioned in the market right now in the market because I know that they are going to benefit from trends. Yes, the NSE Osha Index might look like it's down, but the truth is that if you buy into the right sector, if you buy into the hottest sector, it's just a matter of time. You will definitely make money in the market. The only problem is you are not patient. That's the point. Many people buy stock and they set the timeline, they set the period they want to make money in the market themselves. And they forgot that this market it's not controllable. You can't control the market. The only thing you can control is what you buy. But when you are in, just close your system, go do whatever you want to do. As long as you have done your research from fundamental analysis, technical analysis to sentiment analysis, forget the rest. The market will do the job for you. So this is a video I want to share right here, and you will watch me show you this stock. You should watch me carry out an analysis on this stock and why I think is 37% on the value right now. So we carry out both technical analysis, a fundamental analysis, and also a sentiment check on this particular insurance stock. So here's my disclaimer. As always, please, whatever idea I share right here, they are based on my personal research and calculations. Please always do your due diligence before you invest in this company's stock. The stock market comes with a lot of risk and uncertainty. So please do your due diligence. Make sure you are able to buy stocks that meet your risk profile. It's very important. Now, how I found this particular stock. So let's move on. Now, this particular stock was one of the major winners in 2023. Yes, one of the major winners in 2023. So the trade is already closed, but then I'm looking to take position when it hits my buy point. So right now, the stock is yet to hit my buy point. One thing about my trade in the market is I follow trends. I don't forecast. I don't predict. So whatever I share with you right now is based on trend and not that I'm trying to predict the trend or I'm predicting the direction of the market. That's why I like to have what I call an entry trigger in the market. An entry trigger in the stock market is that activities, that condition you want to be met before you can hit the buy button. If you do not have an entry trigger in the market, you will just be buying random stocks. Why? Because you don't know the exact points. You just feel that because a stock is selling for 1 naira, it's cheap. You just feel that because a stock is dropping, it's cheap. No, that is not how to trade the market. You need to have an entry trigger. An entry trigger are conditions that you must see, conditions that must be met, setup that must be complete before you can hit a buy button on your screen or probably instruct your broker to get a stock for you. So one is I ran a scan of stocks that has delivered impressive Q2 earnings, but still oversold. One interesting thing about this particular stock was that I actually have entered this stock earlier, but then my heavy entry on this stock was after its Q2 earning in 2023. So when I saw the Q1 results, Q2 results, they were amazing. They were very, very impressive. And then I found out that the stock was extremely undervalued and oversold. You know, there's a difference between a stock being oversold and still overvalued. There's also a difference between a stock being oversold and undervalued. There's also a difference between a stock being overbought and undervalued. So you need to just understand all these points in the market. Let me break them down. When a stock is oversold in the market, it means that price has dumped so hard. Sellers have pushed enough volume to the market, like I want to exit, either on profit taking. Now, they have pushed volume to the market to the extent that the stock has crashed to where volume is exhausted. Do you understand? So at that point, nobody is selling again. In short, people that want to sell, they are finished selling. Now, when you look at the stock at that point, what happened? You expect price to recover from there. Now, what would have been responsible for that recovery is absorption. That's what we call absorption in the market. Absorption in the market is where the volume of demand can absorb all supply. That is where you see price go up, because price can only go up when demand is more than supply. So the point of absorption is where, when you look at the your screen, you're able to see the volume of bid being able to absorb all the supply in the market. Hence, and then you're also even able to see people bidding more. Now, some people will say is actually full bid. No, absorption and full bid are not the same. In absorption, there is still supply in the market. But then, as the supplies are coming, the volume is absorbing. Do you understand? That means buyers are willing to pay more just to lock in all the supplies that are coming. But for on full bid, nobody is willing to sell, but you have a lot of demand for that stock. So then oversold and undervalued means that this stock is at the bottom of the market. And then when you compare the stock, the price of the stock with what it should be selling, with the fair value of that company based on certain metrics, and the fair value looks a lot higher than the current market price, we say it's undervalued, right? Now, a stock can be oversold and overvalued. Yes, meaning that sellers are finished selling, they've dumped the stock, but then the price that the stock is currently selling for is still higher than the fair value. It's still higher than what it should be worth in the market. Now, at that point, it's a risk to jump into the stock and buy. Why? Because the stock might dump. There might be some sort of sellers that can just come to the market and dump more because they feel that this stock is overvalued, right? So being oversold and overvalued, they are not the same. They are different entirely. Overvalued is a function of metrics, the financial of the company, and checking what the company is worth. Oversold is a function of demand and supply. So you don't use demand and supply to determine whether a stock is overvalued or undervalued. You use the metric, the financials. What you use to check whether a stock is oversold is demand and supply in the market. Then we have overbought. When a stock is overbought, it means that people have been buying, buyers have bought the stock to the extent where so sellers might step in at every point in time. It's already at the roof. That's why you see FOMO. Now, a stock can be overbought and yet undervalued. Yes, it's possible. That means an example of a stock is Nvidia. Nvidia will get overbought, it will pull back, but then if you look at the fair value of Nvidia, it's extremely undervalued. So these are different times in the market and different times in the life cycle of a stock during trading that you need to understand. But this particular stock I'm showing right now is actually oversold and undervalued. And I'll tell you why. Now, the sales, net profit, and earnings are growing year on year based on macroeconomic trend. You know, there is nothing that can make a stock spike more than trend in the markets. And this trend is macro trend. You need to learn the macro trend. You need to learn how to impact the market and how they're going to drive your stock. Then last one is dividend yield is still attractive on this stock. Dividend yield is still attractive, not above 10% yet. Dividend is above 7% to command institutional interest. You know, there are institutions in the market, there are market players that are always waiting to mop up stocks during earnings season. Why? Because they want to collect dividend. So meaning if dividend on this stock is quite attractive, then they are going to jump on it. Now, it's 10%, sorry, not 7%. Now, I'm referring to the period I found the stock. So meaning that these are the three things that got me interested in that stock. As at the point I picked them, dividend was actually above 10%. Now, currently, right now, dividend is around 7%. Yes, as of today when I run a check. Now, so these are the three things I saw, and I felt like wow. And then when you look at um the technical part of this particular stock, it thought everything was perfect, everything was a hit. I think it was, and that was within the period I hosted my webinar on Cash Out from Nigerian stock webinar in August, and I can't wait to host this year's trading webinar, which is Cash Out from Nigeria 2024. Same August too. Like I already said, August is strategic for me in the stock market. It's actually the best time to position myself ahead of earnings, especially stocks that are going to pay out higher dividend and also stocks that are going to record impressive capital appreciation in the market. Now, the particular stock I'm talking about is AXA Mansard Nigeria. AXA Mansard Nigeria, that's the insurance stock. And so this analysis, the insurance stock is selling for 5.35 kobo. So let's quickly look at AXA Mansard on chart. So the first time I recommended AXA Mansard, I talked about it was around August. Here, this was it here, within this period, August. So, and one of the major entry points, one of the major trigger on this particular stock was a break above this counter trend line. That was a major trigger for me, a break above this counter trend line. And then how that such breakouts could probably take the stock to a new high. And then the stock was selling for around 3.9, between 3.9 to 4 that's the best entry point. You can see from then AXA Mansard has moved from 3.9 to reach a high of almost 6.7 right here. Can you see 6.7? And then we're seeing a pullback. So this is AXA Mansard. Now, a movement from this point to this region gave me a comfortable 64% in 98 days. That's why I had to tag this particular uh, video 64% in 98 days. So this was the movement that gave me that good return from this period up to this region. So right now I've sold. I'm looking to buy once my trigger is complete. Once my trigger is complete, immediately I'm entering. Now, I would have probably reserved this stock for premium members, but then I just want to show you what you're missing in the community, because majority of the stocks that I've already recommended, it's just a matter of time. I'm so sure they will pick up. And one of my major confidence is that they are actually in the hottest sector. You can't buy a stock. I'm sure you can't buy a collection of stocks in the hottest sector and miss it. It's very possible. That's why you need to buy different stocks in different hot sector. If you once you hold them, market would always find value, and value will drive price at the end of the day. It is not price that determines value. It is value that actually drives price. So if you can find a stock with value, and especially stocks that it's completely, or a stock that you've seen that it's grossly undervalued, it's just a matter of time. The market will always catch up with the value of that stock. So this is AXA Mansard right here. Now, if you look at AXA Mansard here, you will see that AXA Mansard, after touching a high of 6.7, has pulled back to 4.85. And this 4.85 is actually this region right here. So let me mark the region clearly so that you understand better. So this region from here, so this region from here, see this region? Yes. These are the key levels on this stock. Yes. This is it here. This is an important key level on AXA Mansard. You can see here, this key level. Let's start with the recent. This key level was tested in June 2023. And then you can see how it was tested multiple times before a final breakout. So now this is also acting as support. So it was resistance in 2023. Right now it's standing as support right here. And you can see the first test, and then we're seeing the second test. So this is like a double bottom right here. This is like a double bottom right here. So, and if you look at the previous rally that we experienced, the stock actually recorded what I call 1, 2, 3. So we had a triple bottom before the market moved. So here we are seeing double bottom formation. So this is to confirm this particular region, how important it is in the market. So any attempt for some answer to dip below this region, then it's a no for me. It's automatically going down like significantly. But right now, this region is sitting as bottom. So for the fact that it's a key level, it means that my risk level will most likely be around this region if I'm going to be holding AXA Mansard. But then I want to see my trigger right here. So what is my trigger on AXA Mansard? My trigger on AXA Mansard is a break above this counter trend line, one, and then a rise above the 50 days moving average. 50 days moving average is around 5.44. AXA Mansard closed yesterday's section at 5.35. So I want to see a comfortable close above the 50 days moving average. And maybe if I want to be a little bit conservative, I could even say 5.9, which is the previous high in 7th of May. So if AXA Mansard can close comfortably above 5.9 and 6, that is a sure, that's a guaranteed. In short, your chance of return is almost near 90%. But then if you enter above 50%, it's actually early, it's an early entrance, but then a break above the previous resistance right here, which is I call it the minor resistance right here of 5.9, will signal a massive run up on AXA Mansard stock. So right now we've seen double bottom at key level. The next thing is I'm waiting for price to rise above the 50 days moving average to confirm the resumption of an uptrend above the trend line to also confirm that that's like confluence. And then finally a break above 5.9 minor resistance would also be a perfect confirmation for us to go in big on AXA Mansard. Now, the question is, if AXA Mansard breaks out of this particular key level, where is the major point? Because I don't want to hold AXA Mansard forever. Now, when I carried out my favored analysis on AXA Mansard last year, that was exactly what helped me. It helped me to know the exact region I should sell the stock so that you don't just assume. The problem I see in the market is many people hold a winning stock. They hold them into their fair value. They don't know that it's time for them to take profit. So it's good for you to always take profit on your stock whenever it has picked up, especially when it trades close to its fair value, except you are a long-term investor in the market. So when I saw AXA Mansard rally into 6, I felt it was time for me to exit the market because it was already trading around my fair value. So the question now is, what is the fair value of AXA Mansard right here? Now, the fair value right here will be based on my projection for 2024, what I am expecting AXA Mansard earnings to look like in 2024. So let's move on with our slide. So having discussed this particular stock, which is AXA Mansard, now here are the interesting numbers. Here are the interesting thing to note. Now, based on the recently released report, right now, AXA Mansard is yet to release its Q1 results. So I'm working with the 2023 financials. So based on recently released reports, revenue, net income, and earnings actually are up by 33%, 411%, and 415% respectively. This is in comparison with 2022 figure. So that means revenue between 2022 and 2023 went up by 33%. Net income and earnings went up by 411 and 415. One of the major booster of this net income and earnings is Forex revaluation. Forex net gain on Forex. So they benefited a lot from exchange rates devaluation in 2023. So that actually supported this company. Now, it could be stocks that are yet to catch up. Sorry, let me take this out. This is supposed to be here. Now, earnings per share has been growing by a compounded average growth rate of 96% in the last 4 to 5 years. This is one of the interesting discovery that I I actually looked at. Now, when I'm analyzing a stock, I don't just want to sell because the stock is fairly valued, right? Now, another thing I watch out for that might probably make me to re-enter the stock is when I look at the growth rate. The growth rate of a company is very important. It is actually growth rate that makes a 100 naira company to be a lot more cheaper than a 5 naira company. So you need to know the growth rate of a company. I've said it multiple times. Absolute price does not make a stock cheap. Because Asamasa is selling for 5 naira, doesn't make it more expensive than another stock. Like if you look at insurance company, you see some stocks that are selling for one kobo. Sorry, let me use like 1 naira. Yes, 1 naira, 70 kobo, 90 kobo. So you don't use absolute price to determine how cheap a stock is. You look at the growth rate. The one that is growing faster is the one that is cheaper, because the one that is growing faster can move from 100 naira to 200 naira. The one that is not growing can still stay at that 1 naira region for a long time. So when I saw a 96% growth in the last 5 years, this actually got me interested in the stock. So I needed to know what the stock should likely be worth based on this number. So in the last 5 years, this guy has moved from 0.1, that's almost like 10 kobo, to 1.5 per share. That's the movement from 0.1 to 1.5 per share. Now, if I look at capital Q, this is it right here, from 0.1 in 2019. In short, in 2020, it was still 0.1. In 2021, moved to 0.4, 2022, 0.3, and then 2023 is 1.5. So for these guys to have moved from 0.1 to 1.5 in 1, 2, 3, 4, between 4 to 5 years, that's interesting. And that's actually equivalent to 96% compound average growth rate. We call it compound average growth rate. So how do you confirm this? So this is how we confirm. If you multiply 96% by 0.1 in 4 times, that's 4 times, it should give you 1.5. That's the way you confirm it. 96%, 1.96 times 0.1, 1.96 times 0.1, 1.96. By the time you do that 4 times, it should give you 1.5. That's how you confirm that this particular average growth rate is correct. But remember, this is just a projection. Now, dividend yield as at right now, as of this recording, is 7.2. That means right now, because the price has rallied, as of last year, it was around 10%. So because price have moved from 3.9 to 10, sorry, to 6 point something. So that automatically the yield will definitely be suppressed. So yield goes down when price goes up, and up in the opposite direction when price goes down, yield. So this guy has actually experienced suppressed yield between last year and now. But then some institutional investors might still consider this attractive. You understand? Considering the fact that there is capital appreciation on the table if you take advantage of this stock at low price. So that is interesting numbers to know about AXA Mansard. Now, before we move on, I want to quickly make an announcement. From next month, June, I'll be hosting 10 people, 10 participants in my first ever millionaire stock trading course. Now, this particular course is one that requires me to hold 10 people. Maximum is 10 people, because I want to relate with them. I want to be able to see what they are doing, review their portfolio. In short, one of the major tasks they are going to carry out is to pick 4 companies in their portfolio from different sectors, and then they're going to carry out a task on this company from beginning to the end. So that way they will understand reasons. They will know why the company is selling at that price. They will know whether they are holding the right stock or not. That's the essence of millionaires stock trader, to help you to do a self-analysis and self-review on your portfolio. So if you join this course, at the end of the day, you'll be able to review the stock you have in your portfolio. You can easily tell whether it's a stock you should quickly dispose or continue to own. At the end of this day, you would learn how to hold high quality stocks for trading. So one of the things you will learn is, one, how to find the hottest sectors in the stock market. So here I'm going to show them how to find the hottest sectors. We're going to do a deep dive into the Nigeria economy. We understand different sections of Nigeria economy, and then what drives what in Nigeria, and then how each stocks have benefited from trends in Nigeria, and then what's currently happening right now. Then the second one is, you're going to see how I analyze financial statement for trading and instantly uncover high growth stock. This is very important. So in the course of this section, I will also show them what I do. So we're going to look at financial statement of different companies, and then be able to uncover the one that are high growth companies and the one that are not high growth company. So the idea is to hold collection of high growth companies in your portfolio, and then you're going to see the exact strategy. In short, there is one method I've tweaked over time that I'm going to show them how to buy low and sell high for double-digit gain in the stock market, and then how to find an oversold undervalued stock in the market. That's a new part of this section that you have never seen before. Like, you're going to see that this stock is oversold, and then you're also going to see that it's undervalued in the market but remember, it's for trading. So it's a one-more section with task and follow-up. So if you're interested in joining, our next section is in October. The first one is starting next month, that's June, and it will run from 1st of June to the end of June. every weekend. It's every weekend. Saturday, Sunday, Saturday, Sunday, Saturday, Sunday to the end of June. Then the next section is starting in October. So if you're interested in that section, you can actually drop a comment right here on this video. I would respond to you and then show you what to do on in onboarding for October. Please, it's just a 10 participant section. Once we are 10, it's closed automatically, and then you have to wait to the next section. So if you want to be part of the 10 people that will be joining our October section, please hit the comment section right now. I will respond to you and then show you how to enroll in this section. Now, the next part of this particular video is my fair value analysis. This is very important. So you could see from this screen that first thing that will capture your eye is the fact that Mansard is 37.3% undervalued right now. So, and I'll tell you how I calculated that. So let me use the simplest and straightforward method of valuing stock. First one, what's the current share price of Mansard? Mansard is currently selling for 5.37 kobo, right? This is it right here. Now, what's the current year EPS of Mansard? The current year EPS is 1.5 based on financial statement. This is it here, 1.5. You can see from 2022 to 2023, 0.32 to 1.5. In short, this growth is massive. This growth is massive. 1.51 minus 0.32. That's 1.19. 1.19 divided by 0.32. This is almost 371% growth in 1 year. 371% growth in 1 year. So now my compound average growth rate in the last 5 years, that's the EPS in the last 5 years, is 96%. 96% in the last 4 to 5 years. Now, I don't want to be too optimistic. I don't want to exaggerate, right? So what I did was to half this number. So I want to go with a conservative projection, do you understand, of 40%. So my conservative projection is 40%. Remember, even between 2022 to 2023 was around 300 and something percent. So based on the 5-year projection, I had to divide it into two just to be fair, just to be conservative. So I'm going with 40%, which I think is okay. So I'm expecting Mansard to deliver minimum EPS of 2.1. So that means my projection for 2024 is 2.1, meaning I'm expecting Mansard to deliver 2.1. So meaning the growth will be from 1.51 to 2.1 in 2024. That's my projection, which I think is fair. And one of the major driver is exchange rate, because these guys are benefiting from exchange rates among other line items. So my fair projection is 40%, which is 2.1. Even though this company recorded 371% between 2022 to 2023, I'm projecting a growth of 40% between 2023 and 2024 based on a conservative growth of 40%, even though the average growth in the last 5 years is 96%. So based on that, it means that if we look at the price earning ratio, the price earning ratio of Mansa right now is 3.5. How did I arrive at 3.5? The current market price of 5.35 divided by current EPS of 1.5. So 5.35 divided by 1.5. That will give me 3.56. So that's how I arrived at price. Price earning is price divided by earnings. Price per share 5.35 divided by earnings per share 1.5. So that gave me price earning of 3.5. That is fair. That is okay based on current PE. So PE basically tells you what it costs. Do you understand? How much is a share based on the earnings of that company? So if this guy is worth 3.5x based on current earning, and I'm projecting 2024 earnings of 2.1. So I'm projecting 2024 earnings of 2.1, and these guys, the investors are paying 3.5x the current price. Then it means that 3.5 times 2.1 will give me 7.35. So if Mansard is able to deliver 2.1 by 2024, Mansard stock should not be selling below 7.35 by the end of 2024. So that automatically means that Mansard has 37.3% upside potential between the current price of 5.35 to 7.35. That is my projection on Mansard. Very simple and very straightforward. So if we look at 7.35 on chart right here, 7.35 on chart is just slightly above the previous high, The previous high here has been 6.75. here before the pullback. So if Mansard is able to hit my entry trigger, meet my entry condition or entry trigger, rise above this region, and then start moving up, then I'm expecting a minimum upside move to 7.35 based on 2.1 earnings projection. So this is why I think this particular stock is grossly undervalued in the market. If this is the first time you're watching this video, kindly hit the subscription button, turn on notification bell so that when I release more videos like this, you will be able to get access immediately.